evening, good afternoon, good morning, wherever you are watching us from, dear esteemed viewers, joining us all across all over the world. I beg your pardon. I am delighted to welcome you to another insightful edition of our business empowerment series, where we bring practical conversation that helps entrepreneurs, professionals, business leaders, and those that are still on the wing becoming an entrepreneurs to work smarter and more, so to have more sustainable businesses. This is a Connect with Comfort show, and it is a platform where ideas come alive, businesses are refined, and leaders are empowered. I'm excited to have you join us for today's show, where our conversation is on money, taxes, and compliance. What every business owner must fix before mid-year. And that is why we are considering it towards the tail end of May. This conversation promises to be timely, practical, and transformational. I remain Comfort Eyitayo, your regular host for Connect with Comfort show. On this program, we aim to add value to people on business enterprise and personal growth. Each show is organized to feature special guests who are usually subject matter experts that helps us to throw more insight on the topic of the day. Once again, you are most welcome. Thanks for joining us. Now, when we consider today's topic, money, taxes, and compliance, what every business owner must fix before mid-year. The truth is that many businesses work hard. They make sales and even appear successful on the outside. But behind the scenes, there are financial leakages, tax gaps, compliance issues, weak record keeping systems, and poor cash management structures, which quietly threaten their growth. And before business owners realize it, penalties begin to pile up, opportunities are lost, investors lose confidence, cash flow dries up, and avoidable financial pressure sets in. Mid-year is one of the best times for every serious business owner to pause, review, reset, and fix critical financial and compliance gaps before the second half of the year begins. Today's conversation will help business owners understand the money mistakes hurting business growth, the tax and compliance obligations they must stop ignoring, the records every business should maintain, and practical steps to become financially healthier and more investment ready. And to guide us through this important conversation, we have a seasoned professional and highly respected expert joining us today. I'll be glad to introduce him shortly after this time out. We'll be right back. Please remain connected. Thank you very much. 3. You are welcome back. This is the time to meet our guest. Dear esteemed audience, you are welcome to meet our special guest for today's show, and it's no other than Dunku Abraham. Dunku is a seasoned tax practitioner and chartered accountant with over 10 years of hands-on experience in taxation, regulatory compliance, audit and advisory services. He is an associate member of the Institute of Chartered Accountants of Nigeria, ICAN, and a resource person to the Chartered Institute of Taxation of Nigeria, CITN. Over the years, Abraham has built extensive expertise in corporate taxation, tax planning, tax audits, investigations, due diligence, compliance reviews, and advisory services across diverse industries. He has supported businesses in navigating complex tax and regulatory frameworks while ensuring operational and statutory compliance. He is particularly passionate about tax reforms, tax administration, and helping businesses understand the practical implications of evolving fiscal legislation in Nigeria. His practical approach, analytical depth, and commitment to professional excellence have earned him recognition within the Nigerian tax space. Abraham regularly facilitates tax training, webinars, and professional sessions focused on contemporary tax developments, compliance obligations, and strategic tax management for businesses and professionals. Our guest today is an accomplished professional with an extensive experience in business advisory, taxation, financial management, compliance system, and enterprise growth support. So please join me in making welcome our special guest for today's show, Dunku Abraham, ACA, to the show. You are most welcome.
Thank you very much,
Dunku Abraham, and we are excited to have you. I'm very grateful that you are willing to do this for us.
Thank you very much, Mark, for this privilege. It's a very nice one. I'm really honored to be here.
Thank you very much. So without much ado, we'll go straight to our interview segment where we ask questions that helps our audience to understand the topic better. And let us begin with the big picture. Why is the conversation around money, taxes, and compliance especially important for business owners at the mid-year point? Why is this so important?
Okay, so that's a very fantastic question. So it is important for businesses, especially around this mid-year point, because businesses obviously need to pause and look at their performance, look at their progress, look at how far they have been able to accomplish their goals, their mid-year plans, their tax exposure, look at how well they have done with their financial budget, and the likes, so as to know their current status before year end. So that if there's any need to retrace back, make certain strategic decisions, they can then, do that. So that they will be able to, by the end of the year, say that, oh yes, we have accomplished, what we set up to accomplish from the beginning of the year. So it is important to do this now, because only when that is done, businesses can know the true current performance with respect to their financial performance, their tax exposures, their strategic goals. So if there's any variance, they can then look at things properly and then make necessary change to their strategy, necessary change to their financial plans, and necessary change to their tax compliance scheme.
Fantastic. Thank you very much for that. So we see the importance for us to start. It's like a media check to make sure that it is
I'm
whatever
not
it
sure I
is
can
that
hear
has.
you, ma.
Okay. Can you hear me now? Can you hear me?
I'm not sure I can hear you, ma.
Wow. What happened to the volume? Hello? Can you hear now? And the mic is not muted. Okay, let me try and
Oh, okay. So I believe the second question you might have asked is what are some of the most common money mistakes businesses make in the first half of the year? So this is a nice question as well, because
can you
one
hear
of
me
the common mistakes that businesses make is mixing personal and business finances. That's a very big one, because there should be a clear distinction between which money is personal expense, and which money is a business expense. So that's the first mistake I think businesses make, mixing both personal and business or corporate monies. The next mistake that most businesses make, by the half of the year, is poor cash flow management. There's a difference between, you know, having the cash and having the proper management mindset to it. So the next mistake that businesses make is spending without budget. So this is where business controls comes in, and this is where ensuring that those controls are not frustrated. So when businesses start spending what is not budgeted, it then means that you know those relevant things that were initially budgeted for will suffer. Then the next common mistake, I would say that businesses make is failing to track expenses, failing to properly track expenses. And then the last, one I would mention briefly is treating revenue as profit, treating inflows as profit, and now that is wrong. That is entirely wrong.
fantastic. Fantastic. I'm sure many of our audience can relate with that answer. But what is important is for us to take due note of that and avoid this common mistake. Thank you very much for that good response. Now, from your own experience, what are the early warning signs that a business may be financially unhealthy and even if sales appear strong? Did you get that question? Abraham, can you hear me? Wow, network is not friendly to us today. Can you hear me, Abraham? Okay, I think we are having a network challenge. Guess we'll log in now. Just a minute.
That's fine. Okay,
Did you
fantastic. I
get the
can hear now.
question? Okay, did you get the third
So what was the
question?
question, ma'am?
Okay, I asked from your own experience, what are the early warning signs that a business may be financially unhealthy even if the sales appears strong?
G, G, please come. He said temperature, temperature. So unlock. Then bring that small fan. Just bring that
So
small fan.
did you get the question? Duku. Wow, they started well. I hope the internet will not
Okay, I can hear you, ma'am. So
You can hear me. Okay,
what was the
did you
question?
get the question?
So was it the question, was it on early signs?
Yes, that from your experience, what are the warning signs that a business may be financially unhealthy, even if the sales appear strong? Hello, you still cannot hear me? Okay, it's on the screen. If you can see the screen. Okay, sorry, that's the topic. Can you hear me now, Duku? Can you hear me?
No, I can't. No.
I thought you heard me a minute ago. What's happening? Okay, the question is your about warning signs. Can you hear now? Okay, let me, I don't know.
can't hear currently.
Can you hear me now? Okay, it's not even there. I really don't
Okay,
know.
I can hear you now.
Okay, let me take that question again.
I can hear you now, ma.
What Okay, from your experience, what are the early warning signs that a business may become financially unhealthy, even though the sales are strong, like the sales numbers are appearing strong, but the business is appearing to be financially unhealthy? Did you get that now? Wow. Media, can you help put it on the screen? Perhaps that can help. The question. Hello, Duku. Okay, are you using earpiece? Are you using earpiece?
Yeah, I can hear you now.
Abraham, are you using earpiece?
Yes,
You may
yes, I
need
am.
to, please, can you kindly remove that? Kindly remove that. I
Oh, but I
just,
can hear you very clearly now.
no, we are having a lot of distortion. We are still on number question 3.
Oh,
We are having to repeat and
okay,
repeat and repeat. So it doesn't make
okay,
a good flow of the show.
okay.
Maybe you will hear better without the earpiece. In fact, it's one of our regular audience that spotted that.
Okay, so I think it was the network, but I've changed to a better network now.
Okay, thank you. But you can
Yeah,
hear me
yeah.
now. You can hear me
I
quite.
can hear you now. Can you just repeat the question, ma'am?
Okay.
Very
I
perfect.
said, what are the warning signs that a business may become financially unhealthy, even though their sales figure appears strong?
Okay, okay. So that's
Mm.
a very good question. Warning signs. Warning sign number one is, I mean, rising debt levels. When a company is, getting fully geared, when the debt, is rising and they are not able to pay, so that's a very, that's a sign. Another one still linked to debt is cash shortage, because when you don't have abundant cash, that means you can't pay off your debt. You can't pay you sort out your financing, your interest, and the likes. And another very clear one that people don't pay attention to is unpaid taxes. When you're not able to pay your taxes, that's a clear sign that your business is struggling, because taxes should be an appropriation of your profit. So when you declare and disclose profit and you're not able to pay taxes off those profits, is a clear sign that your business is, is struggling. That's that's a red flag.
Thank you very much. So we need to watch out when we are getting highly geared. That is, our debt ratio is so high to
Yes,
what more than what it should be, and we are not
yes,
able to meet our obligation as at when due, including tax payments, because the tax is
exactly.
based on the profit we have declared. There should be no reason why we should not be able to pay. So those are signs, very strong signs, that we should watch out for, that businesses may be. Okay, we had the contribution from Bayo. I think it was on the screen before when we were struggling with the internet. Media, can you please help us with that? Okay. It goes thus. What common VAT mistakes expose businesses to penalties?
Okay, so keeping it very simple. Keeping it very simple. One common mistake that exposes companies to penalty is failure to file. The penalties has increased now. Before, many years ago, it used to be 5,000 naira. But now you can pay fine as much as 100,000 naira. And it accumulates monthly. In every subsequent month, you pay 50,000 naira. So failing to file your VAT returns, you'll be penalized. And there's another thing in the new tax law, that companies don't pay attention to. Some companies say, okay, we'll file, but we'll file the correct thing. They will under disclose their revenue and thereby underpay their VAT. It is also a penalty in the tax law. When you do that, you are exposing your companies to taxes because you are making a false disclosure. So those are some common simple practices that companies make. Let's even keep it simple. Let's not make it complex.
I think it's very clear, as simple as it is, that we should avoid what would make us to waste money needlessly.
Yes.
So we need to avoid the mistakes of under declaring and then filing at an appropriate time. It's not saying that I will file whenever. If it's not an appropriate time and you are overdue, you get penalized. That's business money
Exactly.
that you are wasting needlessly. Thank you very much. And thank you for the contribution, Bayo, for, for that. So these are great insights because many businesses make these mistakes that we are pointing out in their activity geared towards the profitability of their business. Let us now move deeper into the financial management side. Money management and business financial health. What key financial records should every business owner have in place before entering the second half of the year?
Fantastic question. Okay. So before we even look at the record, every business owner, entering into second half of the year, all your deals, all your transactions you want to go, your partnership, you must ensure their contract. You must ensure their contract. And any contract you're entering into, you must ensure that those contracts are stamped based on the stamp duty laws. All right. Now, having said that, the key documents that businesses need to put in place are the sales records that capture your sales, your expenses, documentation. When you expend, you make expenses, whether it's capital expense or operational expense, you have to keep proper documentation. Your bank reconciliation statement, your payroll, because businesses will say, "Oh, we have staff, we incur 100 million, 200 million." Provide evidence of those payments. You don't have. There's not. So payroll is important. Then your monthly VAT receipts and schedules. Since the government have engaged, taxpayers as agent of collection, and companies don't get any direct benefit from doing that. But when you don't keep your VAT documentation, your VAT receipt, your VAT schedules, you might be penalized, and then other relevant, customers and supplies ledgers. Those are some of the key basic documentations that companies need to have.
That's very instructive. So we must make sure that we have all those records intact to help us to be able to do our necessary compliance and financial management for the good health of our business. That's very important. Now, a lot of entrepreneurs struggle with separating personal finances from business finances. Why is this such a major issue, and how can business owners correct it?
Okay, so it's very important. This is a very common issue, even with medium level organizations and large organizations, as you say. So one way they can correct this is, having visible financial records and accountability. Let there be, clear rules, as to this person manages this, and those roles must not be should not be overridden, whether due to urgency or influence or any form of bias. You know, Another thing that causes this is poor record keeping. When businesses fail to keep proper records, they can mix up personal, transactions to business transactions, and it becomes difficult to then manage the tax angle, because when there's a mix up, the taxman will think that 100% is business related. And then you now have to start defending. And when you don't have necessary documents that can exonerate those, personal or private transactions, it then becomes difficult. So you likely be taxed more than what should have been taxed when you don't separate personal and private. So financial visibility, clear rules, and good financial controls must be in place.
Fantastic. This is also important because what we are talking about is to avoid losing money needlessly. Like there are some legitimate expenses. If it is not properly classified and treated as such, you may lose the allowance, well, the allowable deduction, you can refer to it, from your taxable income. So if you mix both personal and the business one together, it can just be taken as all business expense, and that will not be deductible from as expense, business expense, from your taxable income. So it's very important so that you don't get to pay more than it is necessary because of your own lack of due diligence. So that's why all these things are important. And if errors have been made so far in the first 5 months, it's high time to look inward and start correcting it before starting the second segment of the year, so that you don't compound the problem. Thank you very much for that response. Now, cash flow challenges. Since we are talking of money management, cash flow challenges remain one of the biggest threats to small, medium enterprises, the one we call SMEs. What practical strategies can business owners use to improve cash flow management?
Okay, business strategies. So businesses should monitor their expenses very closely. Know what you are spending on, know why, make sure the reason is only for business purpose, exclusively, reasonably, and necessary. All right. The next strategy businesses can put in place is to reduce unnecessary spending, cut off unnecessary spending. The next one is improving debt recovery. Improving debt recovery, making sure that your debt recovery cycle is short as much as possible. Then invoicing customers promptly. Make sure that your receivable days are shortened, and then you invoice your customers, um, promptly. And lastly, ensure that you maintain cash reserve for operational stability. Let there be, they also call it emergency funding, but we won't call it that. let there be cash reserve that can meet operational functions.
Thank you very much. That is very key because both for opportunity and for emergencies, cash reserve is very important because there are some opportunities if you don't have the cash to quickly take advantage of it, you may not get that opportunity again. And there are some emergencies that needs fixing like ASAP. So you need to have that money because you cannot be sure to be able to raise money from a third party quickly as against the one that is under your control. So this is very important. And then it's also important for us to manage our expenses, cut out the freebies that are not necessary for our businesses. So we just don't spend for spending sake. So that will help a long way. And then the receivable aspect is also very important. The earlier you are able to bring in money owed to you, the better for your cash position, so that you can try and lend in the creditors payment cycle, but that of debtors you want to reduce it as much as possible, so that one, it doesn't turn bad debt, and secondly, it improves your reserve basis. So these are very good tips that we must not lose sight of for our cash flow management. Now, for businesses that have not been keeping proper financial records, like we mentioned earlier, where should they start from now without feeling overwhelmed? Now realizing all that we have been pointing out, if they suddenly find themselves in a logjam, how do they start and where do they start from?
Okay, so we need to start simple, taking simple steps so that they don't become overwhelmed and discouraged. The next thing they need to do is to, going forward, separate personal transactions from business and your business account. Right? Make sure anything personal doesn't come or mix with the business transaction. The next simple step they can do is try and review or match their bank statement with their invoice. Reconcile your bank statement with invoices you have issued. And then any variance that is left, you should know, oh, these are not business transactions. And then going forward, they try to make sure that they track the monthly income, monthly invoices, monthly expenses, and that no personal or private expense or private transaction is done via the business.
Fantastic. So let's start small, simple, and then reconciliation is key from what our guests have told us. It's very important. That way you'll be able to match properly the expenses and make appropriate posting or segmentation for them. We have a contribution from Femi Sholoye. Invoicing is one thing, collection is another thing. How do one strike a balance, particularly for a small size business going into the market and fighting for market share?
Okay, so this is a very good question because there's difference between you invoicing. You can send out hundreds of invoices, especially for companies that service large moving transactions and businesses. But then that doesn't mean that those invoices you have generated, or those invoices that have been accrued, those incomes will be earned, or has been received. So one very thing businesses can do is not to underplay the place of relationship. Make sure that there's the part of relationship is solid. That will ensure that there is the expectation gap is reduced. The next very key thing that businesses can do is constant follow-ups. Follow up with the relevant relationship unit and then identify why are these invoices outstanding. What is the issue? Is there anything you are struggling? Should we revisit our payment terms? A very good example is when diesel spiked up from, I think, 500 to about 900 and then 2000. Businesses who are doing logistics, who are into transport, were heavily affected. So if you have invoiced that kind of business that have just experienced about the 5 times increase in the cost of diesel, it would have definitely impaired their cash flow. So reach out, with the relevant unit, ask questions, and then when you find out, where they're having issues, then you can now revisit probably your contract or the payment term.
Fantastic. It's very important, especially in this day and age, that prices are galloping, not just increasing, they are galloping. And that one is a key thing. In order for us not to also lose our customers, and like he's saying, a business that is still trying to struggle for market share, you also want to be seen to be amenable, and but at the same time the terms should be well spelled out in a very friendly way, but firmly, because you need money to continue to do business. So the follow-up advice is also very key. Thank you very much. That's excellent. We talked about financial clarity that truly changes the way business grow and survive. But beyond money management, there's another area many business owners fear, avoid, or even it's misunderstood, and that is taxes and compliance. So let us talk about this, taxes and compliance. Why do many small businesses owners struggle with tax compliance?
Okay, why do business owners struggle with tax compliance? The first thing I would say is ignorance. Many people struggle because they don't know. They don't know what to do. They don't know how to do what they are required to do. They don't know the relevant taxes they're exposed to. What you don't know, you can't defend. So if, for example, a tax authority is requiring you to pay a particular taxes, you don't even know if you are supposed to pay those taxes. You don't even know the correct rate, how to be assessed of those taxes. That will definitely affect your compliance. So one key thing is ignorance. When businesses have the relevant knowledge or have this relevant support regarding that, they will then know what to do, know that, oh, they are exposed to certain taxes and they can become compliant. Another critical thing is poor bookkeeping, poor record keeping. You will be so shocked with the number of businesses out there that are big businesses and have some don't even have an accounting system. Some don't even have an accounting software. Big businesses who are doing billions are still using Excel. So definitely, when you don't have relevant accounting system, relevant accounting software, you don't have proper documentation and record keeping. So I still come back to record keeping, but that will be a very big issue. You will really struggle. You really struggle, and then it will now look like the government is requesting you to pay so much, you know, while you are struggling to do that. But when you have relevant documentation, you can have valid grounds of objection to say, oh, this is what my taxes should be. These are the documents that speaks to this. This is evidence that I acquired, such asset of such valuations. And that will encourage you to pay the right amount of taxes. But for example, when you don't have the accurate records, the accurate documentation, you will be blown by all winds of doctrine. And the tax authorities will have a more legal ground to collect even more than what is due from you. So businesses suffer with compliance because of lack of knowledge, ignorance, poor record keeping, and lack of accounting systems and accounting softwares in place.
Thank you very much. This is part of the essence of this show. We should not just hear this, we should take serious note of that. Whatever we lack in terms of knowledge, let us seek the knowledge, and where we are not able to get the knowledge, let us seek the services of those who know. It may be more prudent in the long run to pay small fee to a consultant that will advise you, rather than we challenge with a high tax bill that is actually not what you are due to pay, but you don't have any choice since you are not able to defend otherwise. And for us to be able to defend, we've been talking about record keeping repeatedly, is very important. Our record keeping system must be top notch, and you must find a way of using the right tool. So it's important to take note of all this. That is an excellent response. Thank you very much. So, what are some critical tax obligations business owners in Nigeria should not ignore before mid-year?
Well, this is a very important question. One of the key taxes is VAT, and this is one that businesses should not joke with because VAT is government money, is government tax. Company income tax is a tax that the company is paying from their profit. They might not pay company income tax when there is no profit, but whether you make profit or you don't make a profit, you definitely be exposed to paying VAT. So VAT is the number one top tax that businesses need to, pay attention to. The next one is the company income tax. The company income tax, which is, the tax that companies are required to pay. Businesses would say, oh, why do I have to pay company income tax? It is a statutory tax that every business, are required to pay. And it is just paid out of profit. So in the event that there is no profit at that year, the company income tax will not be paid. The next tax, is the personal income tax, the payee, the tax on the employees' remuneration and also the owners' remuneration, be it, residents, be it Nigerians or expatriates. Many businesses don't pay expatriate tax, so they are also expected to pay the relevant pay on their expatriates, remuneration. Another one is the withholding tax. And withholding tax primarily is the tax that you deduct from payments you are making to your vendor. These are the key taxes that businesses are expected to, deduct, remit, and comply with.
I think that is very straightforward. We need to make sure that we know all this. And then, like I said before, ignorance is no excuse in law. Those things that we do not know in terms of personal knowledge, let us seek for way of acquiring such knowledge. And if we cannot, or we are not able to, let us uh, consult people who know for a fee, and then that will reduce the liability that will be exposing ourselves to. So that's very clear. Now, some entrepreneurs see taxes only as a burden. Can you explain how proper tax compliance can actually benefit a business?
Okay, that's a nice question. How does proper tax compliance benefit businesses? Yes, when you are looking at partnership, in fact, currently with the new tax laws, when you want to engage vendors, you want to go into contracts, you want to go join with business owners and the likes, clients, customers, they request for evidence that you're tax compliant. So for you to get businesses, you need to provide evidence that you're tax compliant. So that is one of the benefits that tax compliance gives to businesses. You are able to get in more partnership, more business owners, you're able to get more clients because you are tax compliant. Especially when we now go international. Now, most international businesses, investors we only engage you or deal with you when you are tax compliant, and they are going to do their due diligence to that. The next thing is when you want to assess, loans, financing, grants, especially when you are getting them from, government or from the bigger guys in play, they definitely will request for, evidence that you're tax compliance, And another one, the third one I would say, which is similar to the first point I said earlier, is when you want to secure investors. I've seen instances where companies, businesses were trying to get investors. They have gone about 90% the way out, and then those investors back out. Why? Because they carried out, a bit of review, and they noticed that the company wasn't tax compliant. So when you want to secure investors, when you want to get loans, get grants, when you want to qualify for contracts, this being tax compliant might just be the difference between you getting it and not getting it.
Fantastic. The interruption we had with our network has really robbed us of time. I have to skip
Okay.
some questions, but just this last one in one word. What
Okay.
mindset shift do business owners need regarding money, management, taxes, and compliance? Just in one word, if you can't do that.
Hmm. So business owners should not see tax compliance or compliance in general as a burden. They should see it as part of business growth and sustainability.
Okay. About the money management as well. What do you advise for the mind shift for money management?
Oh, mind shift of money management. Well, that is key. There is a popular saying that cash flow is king. So when you treat your money badly, when you don't follow your budget, when key important opportunities come, you might lack the cash flow to take advantage of that. So it is very important that money management is looked after as priority across all businesses.
Okay, let me just rush this because it's from our audience. David just
Okay.
said, if I get the name right, curious to know if Excel is outdated when it comes to its use in accounting. I think that question is just a smack on because you were saying some people are still using uh, Excel. I don't think it's outdated. It's just saying that depending on the level of your businesses, there are things that you need to do properly to get accounting software that will help you to analyze and keep your records better. I guess that is what I guess is referring to. So there's another one difference between taxes on profits and sales. Can you help explain for clarity in a layman's understanding how should one ensure a proper accounting record for them? That's a long a long one because we have only 1 minute left to round up. Can you do something in 30 seconds
Okay. So
on that?
the difference between taxing sales and profit is that a tax on profit is after all your relevant expenses have been considered,
Allowable
relevant capital
expenses.
allowance on assets aha, have been considered.
Allowable
While the
expenses.
tax on
We've been
sales,
talking about
yes,
personal business. So only allowable expenses. I think I will take that. Thank you, Dr. Asenyi also contributed that deliberate tax planning can help a company to manage its tax burden.
exactly.
That is very key. Fantastic. Like I said, we'll be robbed of quality time, but we'll take it like that. Maybe we'll revisit
Apologies.
having Duncan to come back on this show because we are really enjoying you. Thank you very much. While we were on, we had
Thank you very
Bayo
much.
Banjo join us and Taiwo Ojo from Abuja, Dr. Aseyi, who just contributed and always regular on this show and a contributor as well. We had Esther Ajubi. I hope I pronounced that well, if not, pardon me, Femi Sholoye, David Dorset, and for others that have not been able to catch the name, please pardon me. I quickly have this 1 minute to wrap up. What it's been an insightful and very practical conversation to date, and thank you very much to our resourceful guests. We are really very grateful, and it has opened our mind more on what we need to do to build our business before the second segment of the year, and also to be compliant, which is very key. So, as we approach the second half of the year, this is the right time for every business owner to review their finances, organize their records, fix tax and compliance gaps, strengthen cash flow management, and build a healthier business foundation. Because unresolved financial and compliance issues do not disappear with time, they grow with time and compound problem for us. Please remember, a business that is financially disciplined and compliance conscious is better positioned for stability, credibility, profitability, and long-term success. Once again, I want to appreciate our highly resourceful special guest that I'm looking forward to hosting on this show another time to enjoy the benefit of his vast experience. Thank you very much, Duncan. Don't let me let me not call your name often. Uh, Dunku Abraham. Dunku Abraham, we are very grateful to you. You've done wonderfully well. We are proud of you. Thank you very much. And the charge for our audience is that since you have enjoyed this session, please share with other people that may also need the knowledge. This is a great session. If you find it useful, like I said, share it with other people. Until next time, when I come your way again, please keep building, keep moving and improving, keep positioning your business for greater impact, and be tax compliant as always. Time is fast spent. I thank you all. Till next time we meet, may God bless you all. Have a wonderful week.
Thank you.
Media, I think we are done.